Our very first guest on Space Money is Raphael Roettgen. He is the managing partner of E2MC Ventures, a space-focused venture capital firm. He is also the author of Hoch hinaus, an introductory book on space business, a lecturer on space entrepreneurship at several universities, the host of the Space Business Podcast, a good one to put on your list, by the way, a contributing editor of spacewatch.global, and a venture partner of Space for Impact. He's kind of a busy guy. Previously, Raphael held senior roles at global investment banks and hedge funds and was also a fintech entrepreneur in Brazil. He holds degrees in finance from Wharton, shout out, machine learning from PUC Rio, and space studies from the International Space University, where he is also a governing member. Raphael, the screen is yours.
Well, thanks, Lee, and very nice pronunciation on the German Hoch hinaus there. I'm
Thank
impressed.
you. 3 years in high school.
There you go. I hope I don't have to say space money every time I say the word money. So
I'll do that for
nice touch
you.
there as well. Okay, well, I guess let me share my screen, and it's nice to see everybody here, and I see quite a few friends and participants as well, which is nice, and increases the pressure, obviously. Okay. So I hope you can see my screen. Okay, space money. What's happening here? I'm going to skip over that because Lee, you've done a really great job with the introduction. So you've actually already mentioned everything on here. So we're going to talk about space money, and this is a lot of space cash, guys, and there's a lot of space cash right now. So think of all the things we can do with that. Okay, just quickly reviewing the sources of available funding, and there's probably no big surprises here. I mean, you basically can classify, very broadly speaking, into public funding sources and private funding sources. Of course, on the public side, we have the space agencies. We have very important in some countries, including the US, of course, the military and the intelligence community through various entities. We have development agencies, which we obviously like, sometimes academic institutions, and they can provide funding in all sorts of forms, grants, so non-dilutive money, equity, debt, contracts, and so forth. And of course, on the private side, we have angel funding, very important for early stage companies. We have professional venture capital funds. We sometimes attach to companies when we call them CVCs, corporate venture capital. We have other financial institutions, which are increasingly coming into the space sector as well, and especially in the later stage round. What I mean by that is, it's traditional asset management companies and larger private equity funds, hedge funds. I mean, we've seen a lot of that in, for example, in the so-called pipes for the SPAC transactions, and also in some of the larger, Series B, Series C, and so forth financing rounds. So I'm sure many people will have seen today's announcement of a $650 million round for Relativity, led by Fidelity, and that's jointly with some other large funds, and that's a prime example of sort of other institutional investors coming increasingly in the space sector. And then lastly, we have the public markets, so listed space companies raising money on the stock exchange, and of course here the interesting trend, which we'll come to talk about in a few pages onwards, is the SPAC transactions, the special purpose acquisition companies. And again, that money come in many different ways. Often it's just equity. At the earlier stage, it's often convertible, so what's called SAFEs. It can be debt. That's actually also becoming increasingly common, especially for later stage companies. And then some other forms of financing, like even things like factoring. I just realized one thing I didn't put on here. It's sort of implicit in angel/venture capital, but it's very interesting, is crowdfunding. And a shout out to our friends at Spaced Ventures, which is a space specialized crowdfunding platform where I have the pleasure of being on the investment committee, and that's formally launching later this month. Okay, quickly running through of how some of these investors can be characterized, and again, there's probably nothing very surprising here. So if you kind of start very early on with friends and family, they would typically invest pre-seed, and typically they don't know a lot about space. I mean, they invest in you because you're a relative, or they believe in you, you're a friend, and that's why it's called friends and family. Everybody else, incubator, angels, VCs, corporates, the level of space knowledge can actually vary a lot. Sometimes people are very knowledgeable about space, and sometimes they're actually not knowledgeable about space, and they rely on other co-investors or outsourced due diligence or a combination thereof. Let's go actually talk about specific activity in space financing. And here is sort of the top rounds year to date. Year to date, I should say, through the end of May. So May 31st. This is why you don't see relativity on here, which is otherwise would be the third largest financing round for $650 million, again, announced today. So you can see here, this is the top 16, SpaceX. I'm sure this is actually not going to be the last round this year, but 1.1 billion. And then a few things to note about this list. I mean, if you have been following the whole SPAC trend, again, the mergers between special purpose acquisition companies and space companies, you see a lot of them on here, especially the larger ones. So Rocket Lab, Black Sky, Astra, Spire, Arkit, Redwire, they're all SPAC transactions. Nevertheless, so they've contributed a lot of money to the space sector. A lot of money has flown into the space sector via SPACs, and we'll see that in a second. But we also have some larger, quote unquote, traditional rounds, as you can see here. And OneWeb has done a couple of rounds already this year, and also large rounds. Again, relativity today, but we had one by another launch company, ABL Space, a couple of months ago, 170 million. And then Firefly, yet another launch company, 75 million. What's interesting, this year-to-date list, and I kind of think and hope this is going to change, it's very US and UK heavy year-to-date. So at least looking back last year, there would have been like a few more international companies in here as well, like Asian companies. We had quite a bit of activity in China last year, and then even some companies in continental Europe, which is completely absent in this list of top financing rounds here at the moment. Okay, so just to illustrate this a little bit further, so on the left side here, you have a graph illustrating the increase in private financing of the space sector. So this is, again, angels, venture capital, and so forth. And the bar chart here is basically showing you the number of financing rounds. And you can see there has been, quite a nice growth over the last 10 years. 2020, for some reason, is missing here, but it's actually held up really quite well despite COVID. And if you look at the total value, it's been over $5 billion raised in 2020. And again, despite COVID. And by the way, you will see different numbers out there. You will see numbers as high as above 8 billion of private financing for space companies last year. And the very simple reason for that is that there is no sort of commonly accepted definition of what a space company is. And some people kind of put in certain things that other people don't put in. It's sort of like, what do you consider a space company? Like, how closely connected does it have to be to space? Or is it something that, for example, uses satellite navigation and hence it's still a space company? But this is why you see differing numbers. But I think the sort of the range would be last year 5 to 8 billion. So quite a lot of money. Now, on the right side, you have the SPACs and sort of, I would say, the recently announced SPACs. Because if you were to put a complete list of SPAC mergers with space companies, you would put in things like Iridium, when it came back to the stock exchange, actually was via SPAC transactions many years ago. And so I start here in just to draw the line somewhere with the Virgin Galactic merger with Social Capital in the summer of 2019. And then starting in the fall last year, as I'm sure many of you have accompanied, you had sort of a quick succession of, quite a few more mergers of SPACs and space companies. And if you look at this list, this has raised another, over 4.5 billion for space companies. This is making certain assumptions, specifically that basically they get all of the cash that's in trust at the SPAC and all of the what we call the pipe financing, and that there's no redemptions. So this is a best case scenario, just to point this out. But still, $4.5 billion, this is a lot of money, right? I mean, you can see if you compare it to the number of the left, this has been a significant driver of additional inflow of financing into the space sector. And I always like to say that, the SPAC activity is, I think it's fair to say, is seen as controversial for certain reasons. But one thing it has done for sure is it has materially, I think, accelerated the inflow of capital, of investment capital in the space sector. And, and I think it's a good thing because it helps us build out the, the basic infrastructure and the basic space economy. just to go a little bit into statistics for space financing, this is now on the private side over the last 10 years, because I think it's interesting just to see some of it. If you look at it by geography, probably unsurprisingly, the majority of the activity, well, about half the activity, looking by value or looking by number of rounds, has been in the US, and then in certain other key countries. I should make the caveat here, this doesn't include China because the numbers historically haven't been entirely reliable, I think. So China is clearly missing here, but you see the US, the UK, some of the key European countries. And this is 2009 to 2019, but if you were to add on 2020, it actually would not change a lot. If you look at it by subsector, and this is sort of the activity, the main types of activity used in space, like satellite communications, remote sensing, and just hardware. If you look at by number of rounds, so this is on the left, probably unsurprisingly, remote sensing DS means downstream. So this is people who do not actually have hardware in space. They're just analyzing satellite data, right? This is the largest number of rounds. And to some extent, it makes sense because they're often smaller rounds because these companies are less capital intensive, right? Because they don't have hardware. If you look on the other side, on the right-hand side, by value of rounds, again, probably unsurprisingly, satellite communications, remote sensing, so with upstream remote sensing and launch are leading because that's where you put hardware in space and it can be very expensive. Diversified here is basically a category for SpaceX because it's obviously at this point in time a launch and a satellite communications company. Okay, so looking a little bit further at space companies in the public equity markets, and this is basically a space index we've created in-house. This is only looking at North American, well, mostly US companies. I mean, we could look at some international companies as well. There are some listed space companies in Europe and even in Asia. But just to kind of keep it a little bit cleaner in terms of the currency conversions and everything, this is substantially the US. So this index includes it does include all of the SPACs that have announced mergers with space companies or have concluded them, like Virgin Galactic and AST and Science have already concluded their transactions, right? But it does also include companies like, for example, Viasat, or even here is still included Orbcomm, which obviously is being sold, and Aerojet Rocketdyne, which is being sold, EchoStar and Kratos and a few other companies like that. And we really see that sort of and if some of you have invested in the public markets in space companies, you probably felt that firsthand. At sort of end of last year, this really started to take off, and it was everything. It wasn't only the SPAC stocks, those two, but also stocks like, for example, like I mentioned, Viasat experienced large price increases. The blue squares on here is dates when there were SPAC mergers with space companies announced on those dates, and the green dot here. In January 2021, that was the announcement of the ARK Space ETF. So Kathy Wood, ARK Investment Management, obviously a very, very prominent investment management firm these days, focused on emerging technologies. They announced the filing. They filed for the ETF on that date in January, and every space-related stock popped 10, 15, 20% on that day. And then you have this graph sort of peaking out in, well, sometime around February, and what happened then is basically, especially a lot of the SPACs, so the SPACs that have announced mergers with space companies had traded up a lot, started coming back a lot. I mean, you had some SPACs basically always get IPO'd, also get listed at $10, and you had some SPACs which traded up to even the high 20s from memory, and whereas now actually most of them have traded back close to $10 as people are much more cautious about the perspectives, questioning the forecasts, and have cooled down a lot on, at least for the time being, on these transactions. This is basically the same graph, just overlaying as a reference the NASDAQ in blue and then the S&P in green. It's kind of funny. It's almost like space was trading more with the S&P, and then again, sometime last year, decided, well, wow, it's space. We're high tech. We should actually be joining NASDAQ, and then for a while exceeded the NASDAQ, and now came back to trade closer with NASDAQ. I didn't put it in here because I think it probably is too much detail, but we're doing things like running beta analysis, or what's called beta analysis as well, for you who are more familiar with corporate finance. And basically, you can see that there is a reasonable amount of correlation between this space index and NASDAQ. Okay, I also thought it'd be interesting to talk about. Actually, let me go back. One thing I forgot to mention here: I did put in NASDAQ and S&P 500. I could have put another graph talking about ETFs, and I will talk about this in a couple of minutes. But there's also space specialized exchange traded funds, ETFs, which mean to track the space sector. And I have one of those I already mentioned, which was the one announced by ARK Investment Management in January. But there's also another couple. One called it has the very nice ticker symbol UFO, and the other one has a ticker symbol ROKT. And if I had put this graph, you would actually see that it's trading basically in the middle of these lines. It's trading below our constructed space index, but it's trading above the S&P. Okay, I thought when we talk about space money and investment in space, it was interesting to have one page where we talk about challenges of investing in space, which we still see a lot. And again, my main day job is running a early stage space venture fund, and so we're talking to our investors all the time and to potential investors, and so we get the feedback about how they think about the space sector. And so some of the the feedback and the messages we get are basically on this page. I mean, it's I think rightfully considered a deep tech sector, and that just intimidates some people. That's good and bad, right? Because that's a selling argument for us, because we're like, well, it's a deep tech sector, respect that, you shouldn't try to do it yourself, you should outsource it to specialist investors like us. But of course, some people will shy away completely, in the same way that some people don't invest in biotech because they just think they don't understand what's going on. The next couple of points are related, and they're probably obvious to everybody on this call. It's at least some of the activities in space. Again, generally speaking, anything where you put hardware in space is very high. It's very capital intensive. I mean, probably every rocket company out there has spent at least a few $100 million to get to, well, even close to orbit, sometimes even not yet to orbit. And the same thing, for example, like satellite constellations, any sizable satellite constellations, you can quickly run into the hundreds of millions of dollars as well. And then, of course, the third point related to that, in those hardware heavy models, there's typically a lead time of at least a few years until you start generating revenues. And again, there's a flip side to that, in that, if you go through that, ideally you have built up a moat and a defensible position, but again, not all investors are comfortable with that. There is a class of investors who just prefer something where the revenue is around the corner, there's better visibility, it's shorter timeframes. The fourth bullet points, this used to be a very frequent bullet point in the past, the sort of people complaining about a lack of exits of space companies, so space ventures that have come to fruition in some way in terms of being acquired or IPOing or listing. Now, arguably that obviously now has gotten better, in large part due to the SPACs, right? Again, you've seen on the other page there have been 8 SPAC transactions, and if those all go through, and then there's typically a lockup period of six months or 12 months, and they trade well, then this is going to provide the investors with exits. I think it's still too early to say what's going to happen, but I think that generally speaking, the trend seems cautiously positive. There's more exits. And by the way, it's not, I keep mentioning the SPACs, but it's not only the SPACs, right? We have M&A transactions as well. Again, I mentioned Aerojet Rocketdyne was sold to Lockheed, and Orbcomm was sold to a private equity group. And there have been other exits of smaller companies, Blue Canyon to Raytheon. And there's actually quite a bit of M&A activity in the space sector as well. So I think this exit point, it is slowly getting resolved. My standard comeback to that also, when investors still complain about it, also is that I still believe that in this latest reincarnation of space, that we're very early on still, and it's completely natural that we don't see a lot of exits yet. If we compared a lot to the internet in the mid-90s, and you didn't really have a lot of internet exits in the mid-90s, it just takes a certain amount of time. If anything, you expect failures before you expect more exits. And then the last point here, I have to explain a little bit: increasing overlap with other sectors. What do I mean by that? So at E2MC, my firm, we kind of roughly divide the space investment universe in 2 categories. One is actual real, quote unquote, real space companies that sort of enable going to space or some activity in space. So like launch companies, satellite integrators, Axiom doing a space station, things like that. But there's now an increasing class of companies that actually leverage space technology to do something else, and typically to do something interesting on Earth. So think, for example, Earth observation companies, and it may be just downstream companies that serve the agriculture sector or that serve the insurance sector. And I think some of these use cases are among the most interesting. But of course, the challenge in there is that it's not enough to be a space expert anymore. You actually need to understand the other side as well. And arguably, often you need to understand the other side even better. So we're thinking a lot about that because we're seeing a lot of interesting opportunity. Internally, we're solving that by partnering with specialist investors from, agriculture, fintech, and so forth. But I think it's something that's increasingly becoming apparent that people will have to think about. Just quickly talking about if people want to invest in space, and again, nothing here is, of course, investment advice, but what are the key ways that you can invest in space? The private markets, you can be an angel. So that typically you would have to be an accredited investor, but then you have the second option, the crowdfunding. And again, I mentioned Space Ventures, and there's other platform, but I think that's an interesting way where people who are not accredited investors can invest in space companies. And of course, you can become a limited partner and investor in a specialized VC fund like ourselves, like Seraphim, like Space Fund, like Starbridge and others as well. Then again, you typically have to be an accredited investors. And then in the public markets, you can invest directly in space stocks like the ones I mentioned, or in one of those exchange traded funds like the one by ARK Investment Management or the UFO one. And I'll stop here to leave some time for questions.
Great. Thank you so much, Raphael. You covered so many different little pieces, and I want to dig in just a little more to a few of those. You mentioned exits and talked a little bit about some examples there. And yesterday, Space News had a new one that Apollo Fusion is getting acquired by Astra. That was
Yes.
new to me anyway. And just curious, normally when there's this huge proliferation of startups in an industry in a given amount of time, there's somewhere down the road that there'll be a consolidation going on in the industry, like a feverish consolidation. What do you think about vertical integration? When do you see the larger wave of consolidations happening? And sort of how do you see that playing out?
Yeah, I think this is a very good question, Lee. And let me answer that in several ways. So one, starting with the example you mentioned, which was Astra acquiring or announcing the acquisition of Apollo Fusion. And that is something we actually expect more of, in the sense that this is one of the companies, Astra, that basically has gone, or is going through, I should say, a SPAC transaction, right? So they're getting, the number is somewhere on the page, I forget it now, but they're getting like a significant amount of additional funding, hundreds of millions of dollars through that SPAC transaction. We absolutely expect that many of these space companies which have raised these significant amounts through SPAC transactions will partially deploy them towards add-on acquisitions. In fact, it's something we hope and even bet on in terms of like some of the things we invest in, that they might end up being acquired by some of these space companies that are going through SPAC mergers and using the cash towards add-on acquisitions. Another sort of aspect of consolidation is, and I mentioned as an example, Raytheon acquiring Blue Canyon and Lockheed acquiring Aerojet Rocketdyne. Well, the latter is probably not the best example, but what I was going to say is established large aerospace companies like Boeing or Lockheed or Raytheon or Honeywell or whoever in the US or Airbus or Thales Alenia in Europe. I think all of them are currently going through sort of a strategic thinking of like, well, how do they have to reposition their product portfolio and how to ensure that they're also profitably going to be able to take part in this like whole new space thing.
Yes.
And that I think will also generate some add-on acquisitions, as some of the large aerospace companies, the majors, will probably rightfully decide, well, we shouldn't try to do this in-house because for cultural reasons or other reasons we can't do that. Let's just acquire those guys.
Yeah.
I think we'll see a lot of that as well.
Yeah, that makes a lot of sense. It's kind of like when Exxon acquired XTO, and sort of rather than trying to develop new skills in-house with shifts in the industry, you had just acquisition by the largest companies who had plenty of cash on hand of people who knew how to do the new things that were going on. So that makes a lot of sense to me.
We see it in many industries, right?
Yeah.
Like large financial institutions acquiring fintech companies, large pharma companies acquiring biotech companies. It's actually a relatively common thing.
Do you think that the space money community is generally making good decisions about investment criteria? I mean, you've got to have that balance. Are some of the companies who are investing in those top categories on your lists, are
Mm.
they also putting a little bit of capital at risk, or are these completely different investors investing in those two? So one will be low risk and very profitable, and the other just throws it all away. Do you think we're making good decisions?
Yeah, time will tell, right? I couple of comments on that, I guess. I think what you just called the space money community. I think it's way too small. I mean, the specialized space money community. I
Yeah,
really hope we're going to get. I mean, it sounds funny, right? Because it sounds like I want more competition, but I don't see it as competition because, as everybody on this call probably, I hope that space will really grow a lot, and then it's there's not going to be a shortage of opportunities. We actually need much more venture capital. And I do think that space, like I said, is a deep tech sector and it merits some respect. We compare it to things like biotech. And so we wish there was more specialist investors, which then can also, give comfort and help out generalist investors to come in.
yeah,
Because what we all don't want to happen is that this goes into some sort of like frenzy or hype, and then there's going to be like capital misallocated. Because then if you get too many disasters, obviously, right, then people could get put off
gun shy.
for a little while, and we obviously don't want that.
Great answers. Raphael, it has been a pleasure to have you on. Hope you'll join us again
Sure,
sometime
it's been my
soon.
pleasure.
Appreciate it.
Thank you.